All right, so I was sharing this with my Discord this morning, and you would have to go back 14 years to the global financial crisis to find a moment in history with what we're going through right now. So we've had 5 consecutive weeks of bloodshed, okay, in the S&P 500. And you can see these lines here represent the times when the S&P 500 has had 5 or more consecutive declines. You can see during the dot-com bubble, it actually peaked. So they had 8 weeks, right? 8 weeks of straight red days in the S&P 500, and this was only ever seen again right at the beginning of the 70s. So we know that 70s period was one of the worst decades. You had inflation during that period. You had high oil prices during that period. Pretty much everything that we're going through right now, you had that in the early 70s. So yeah, they experienced 8 long consecutive weeks of just blood in these streets. And as you can see, this is us today. And, you know, with the CPI data that came out today, I mean, we pretty much missed economists' predictions. We were a bit higher. OK, so CPI came out hotter than what was expected. However, we did see a decline. OK, so inflation barreled ahead at 8.3% in April from over a year ago. However, I guess the positive that we can take away is that last month's CPI was 8.5. OK, so the argument is whether we've peaked in March, and so far, I know it's only been 1 month of data. We didn't surpass the 8.5% set in March. We've actually gone down. Yes, we've gone down slower than analysts expected. I mean, they were estimating 8.1% and we delivered 8.3%. But regardless, it's still very high. The markets absolutely hated the fact that we missed the estimates and we have continued lower. So the question is, are we going to experience over 8 weeks of consecutive blood on the streets? Or are we going to best it? You know, are we going to go to 9 weeks or 10 weeks of just straight bloodshed? It remains to be seen. Okay, so stay tuned. I shared this over a month ago in the YouTube community. You know, Shelby Davis says that you make most of your money in a bear market. You just don't realize it at the time. He was right. Okay. You know, because right now, all I have is the confidence and the faith in the companies that I've invested in, and they've continued to perform. And, you know, just the hope that one day the markets will eventually realize the value and the stocks will catch up to the fundamentals and the financials of these businesses. That's all we have to rely on according to history. And as a result, I have been buying, and I'm going to share in this video the 4 main stocks that I've been buying recently. But before we get into that, welcome. It's been a while, guys. It's been a while. There's been a lot of life changes that has occurred. So if you've been a follower or subscriber since before September, you would know we recently had a baby. And yeah, the house was getting a bit small. So we decided to upgrade. We got a much bigger house. So we began moving March/April. And as you can see, I'm in a completely different setting. And it's because I'm in a new office. So that has taken up a lot of my time. Also, I decided to focus on building my property business. And as a result, I've added a new property to my property portfolio, and it's in Oxford. So as you can see, it's listed on Airbnb. So if you don't know, I have a number of properties that I have listed on Airbnb across Manchester and across Oxford. And this is our latest addition. Okay, so a lot of the works I actually spent doing myself. So in terms of painting, I had help from my brother-in-law. But a lot of it was done myself, building all the furniture sets, painting, you know, the light bulbs, the cleaning, everything. I did it myself. And that was quite good. That was good. But again, it did take away time. It did take about 3 to 4 weeks. And there's also another reason why I haven't been making any videos. But yeah, this is actually an opportunity to plug. If you are traveling to Oxford and you need a place to stay, if you're coming as a group, yo, check your boy out, man. Hook your boy up. This is the stylish city centre home with a private garden in Oxford, okay? So yeah, that's also what I've been busy doing over the past couple of months. I've been expanding my property portfolio. And also during that period, YouTube became extremely toxic. One of my favorite YouTubers decided to quit. You know, there was just so much beef going on between his channel and other channels. You had popular YouTubers selling out and eventually buying back in, and now it's down again. It was a crazy moment, crazy period. and it began to reflect within the comment section. The comment section became a bit wild, man, and I needed that time to just separate myself from the whole online finance community. Spend more time with people who are critical thinkers. In my Discord, we're sharing research, making sure that our thesis was still intact. And there are some companies that reported earnings and the thesis has broken down, and I have sold that position, which I will share in another video. But I have been taking advantage of this bloodshed, and I'll share with you what I've been buying now. Okay, so the first stock that I've been buying quite heavily has been Airbnb. Okay, I like the stock, I like the company, and one of the advantages of being invested in Airbnb and also being an Airbnb host is because you can gauge demand. All right, so majority of my properties have been booked up pretty much till to December. There's still a couple of days here and there available, but we are getting bookings in December. So if I'm getting bookings in December, then other hosts are also getting bookings in December, which means more revenue essentially for Airbnb. Okay, so Airbnb came out recently and reported pretty much a record number of nights and experiences booked. I mean, we've now surpassed where we were pretty much in 2019, so before the Corona pandemic. And if you take a look at the quarterly summary, you can see before this recent quarter, the peak of nights and experiences booked was at 85 million. And as you can see in Q1, it was 102.1 million nights and experiences booked. So we are now far ahead of where we were before the Corona. And guess what? The trend is not going to slow. Okay, like I said, I'm seeing demand for my properties way out till the end of the year, and I'm sure other hosts are also experiencing the same thing. People have been locked in for over 2 years and desperate to travel, go to new places, new experiences. And as a result, the company also gave some really strong guidance for the near term and also the long term. And I see it, okay? I absolutely see it, but the market doesn't. It's not even like the market doesn't see it. The market just doesn't give a damn right now. So this is the charts for Airbnb. You can see we IPO'd towards the end of December. We did set a low there at 120, I believe the low was. And of course, we had this parabolic move, and it's just kind of been very volatile since then. But recently, we broke a key support level here at 130. We've also broken that early IPO support that was set back in 2020. We've broken that at 120 range, and we are now pretty much at 116. So right now, as it stands, there's pretty much no support for Airbnb, and this puppy could go much lower. Okay, so the discounts could get even further. It could become even cheaper to own this company because look, the reality is Airbnb is not going anywhere anytime soon. People love to use Airbnb. I've seen it. I'm a user as well as a host on the platform. The millennials have really adopted this and taken this on in their stride. And also Gen Zs. I mean, everyone is using Airbnb. And I think the number of nights and experiences booked over time will continue to trend upwards. Okay, so they're over this whole period during the Corona. That whole period is over. Okay, it's going to be a continuous uptrend in my opinion. From a financial point of view, you can see the top line has just been trending in one direction. Okay, Q3 is typically our strongest quarter, but I mean from Q1 again, 70% year over year growth from Q1, and also Q1 2019 absolutely smashed it, almost doubled since 2019. Looking at the bottom line again, it's been trending in the right direction. I mean, during the Corona at the heights, the company reported a net loss of 1.2 billion. Crazy. But of course, the recovery has been nothing short of dramatic. It's been insane, very impressive. I mean, in Q1 2022, we reported only 19 million as a net loss. Again, in comparison to this period here of a net loss of 1.2 billion, even if you go back to Q1 in 2019 before the Corona, it was 292 million. So the financials from the income statement point of view have improved. Again, the company is also generating free cash flow, which has also been trending beautifully in the right direction. I know a lot of people are talking about, avoid companies that are not generating free cash flow. Well, Airbnb are generating free cash flow. It's trending in the right direction, and the stock is still getting hammered. Okay, so that theory whereby companies that are not generating free cash flow are the only companies getting hit, it's completely false. Don't buy into that garbage, okay? Because Airbnb are, and they are still getting absolutely slammed. Okay, so the next stock that I've been buying is Hims and Hers. This company just absolutely continues to crush it. Okay, Every single quarter since this company has come public, they've crushed it. Okay, Andrew and the team are doing an incredible job. From this bar chart that you can see, which pretty much breaks down the revenue segments, I mean, online revenue has been going in one direction. Okay, it's been growing like a weed. But I want you to pay attention to the growth that we're starting to experience in wholesale revenue. Okay, so in Q4 2021, the wholesale revenue was 6.3 million. In this most recent quarter, it was 7.2. But if you go back to Q1, right, 2021, it was only 1.6 million. That's how much revenue the wholesale side of the business was generating just a year ago, was 1.63 million, versus this quarter, 7.2 million. Now, this, in my opinion, hasn't been by accident. Okay, Andrew has been very deliberate with his appointments. We recently appointed this Uber vet, Amy, I believe I'm going to call her that, Parek. But pretty much her role or her responsibility in HIMS is scale. Okay, so Parek brings a background of helping high growth companies such as HIMS to scale. Okay, that is her main experience. And so far, judging by the numbers that we're seeing and the growth that HIMS are experiencing, this appointment seems to have been an incredible appointment by Andrew and the team. Again, this is the kind of things that you look for in the leadership, in the CEO of any company that you own. What are the impacts that the recent appointments are having on the business? And I mean, the numbers don't lie. And it wasn't just this lady. I mean, last year, August, okay, Andrew appointed a chief growth officer who was responsible for driving continued growth across an expanding number of telehealth specialities. Okay, Andrew has been focused purely on growth, okay? And we are seeing exponential growth right here, okay? 94% year-over-year growth in our top line, whilst also being responsible in terms of keeping our gross margins intact, and also our operating income has also been trending in the right direction, okay? We're on our way to net profitability, okay? It's only a matter of time. If this team remain intact and continue to execute and deliver, I mean, I will continue adding to my position. You can see here, the margins have been consistently high, which has been over 74%. This, in my opinion, is great operational excellence. But does the market even care? Absolutely not. I mean, look at HIMS. We set a new all-time low today, you know. If you look at this, you would think, okay, this is a pump and dump penny stock, right? You know, it was a SPAC for a period of time, and then it had that spike hype, which pretty much most SPACs did. And it's just been an absolute downward spiral since it peaked in February 2021. And I mean, the company came out, delivered a triple beats. They beat on the top line, bottom line, and subscribership growth. Market doesn't care. The stock is now trading at $3.10, and it's well on its way to visiting $2, maybe $1, maybe it drops below $1. I don't know, because right now there's just no support. Okay, there is zero support for HIMS, but all I'm focusing on is what Andrew and the team are doing. As long as they continue to grow and expand like they are, and they keep operations tight, maintain high margins, you know, we're going to hit profitability, and the company is going to continue to execute. So HIMS, I'm a proud shareholder, and I continue to own more of this company. Now, next on my list is a brand new addition to my portfolio. It's Alphabet, or Google. I mean, right now, the valuations on Google are very, very attractive. The PE ratio is traded much lower than it did during the crash in Cironi. So the PE ratio bottomed at 23.46, and right now we're trading at 20. Okay, the PE ratio is 20. For me, my plan with Google is very simple. As it continues to drop, I'll continue to add on every single quarter. Okay, I'm not buying every single dip of Google. Okay, I'm just going to sit tight, build up my cash pile, and with every quarter that Google reports, if they show continued growth, continued strength, I'll continue to add. It really is that simple. I mean, Google needs no introduction. We all know Google. You can see all of their different diverse revenue streams, and it's continued to just trend in the right direction. Nothing's really changed. Even if you look at it from an annual point of view, I mean, this paints a much better picture than I ever could. Again, multiple streams of revenue, and they've all been growing. This is a mega cap that I believe will continue its exponential growth. They have a strong moat, and the current CEO seems to be doing an incredible job. If you take a look at net income, again, it's trending in the right direction. Balance sheet, Google has one of the best balance sheets in the business. And yeah, I'm not going to waste too much time on Google. And last but not least, because I don't want it to be too long-winded of a video, it's Opendoor. Okay, Opendoor came in, and guess what? You know, for all the doubters who said that iBuyers can never be profitable, especially after Zillow's fascinating exit, well, in this quarter, okay, Opendoor reported the first ever net income. Okay. Also, the homes that we sold were very, very strong. The margins, I think the margins was really what impressed me the most. Okay, so our margins were over double digits. Okay, so from an operations point of view, the team seemed to have this on lock. I mean, yes, HPA has been coming down. Eric has expressed in multiple earnings calls that, you know, Opendoor will thrive during down markets. Well, him and also Kerry Wheeler seem to be right so far. Of course, it's still just Q1, but you know, we know HPA has been trending lower for the large majority of last quarter, and have continued lower. And the fact that despite falling HPA, the company reported net income was incredibly impressive. And I believe that this trend can continue as long as the company continues to expand rapidly. It's a trend that I think will continue higher, and it's only a matter of time before the stocks catch up to the fundamentals of these businesses. So Opendoor, it still remains my largest position, and I have continued to add to Opendoor. So those are the stocks that I've been buying recently. I have been buying a bit more. If you're in my Discord, you know what I've been buying, and I'll probably do a part 2 to this video. But my next video will be stocks I have sold. Okay, so I have liquidated a couple of positions. These are positions whereby my investment thesis weakened over time, and I'll be sharing that with you in another video. So yeah, it's good to be back. I would appreciate if you guys give this a thumbs up video. You can subscribe if you want. And yeah, I'll catch you in the next video. Peace.